Hi everyone. It's me. Here I am. We'll be talking to Adam Button tomorrow for his July seasonals, a look ahead into July. But I know, we're mainly concerned with a look behind and what did it give us. So, really nice to start off the week with a couple of nice trades and trade suggestions. I never believe that anyone should take anyone's recommendations or trading suggestions blindly, only if it lines up with your work and that you can learn from it. That's why I give you the breakdown of the whys when I'm doing things so that you could see it, you could learn it, you could repeat it, and you have some ammunition. You have more arrows in your quill to use in the market. So that's enough about me. Let's talk about the markets here. So started off the week with a pretty nice trade on the short side of oil. It's bouncing back here today, but uh, I posted take half, and it was over $1, and the break even stop is at 74. Maybe we can get another run. I'll try it again because it's not going to confirm. So part of it is that there's still some risk on occurring. But the dollar is still acting good. This is a theme and a narrative I've been talking about for a while. Maybe we stall here, but I still think we're going to take out this high that we have now. You have to be flat for this jobs report, traders. Okay, because what have we had? We've had two weaker than expected numbers. So there could be a surprise. I'm expecting it to be a surprise, which normally, if it's a strong number, would be, bullish a dollar, and it's possible. But you saw what happened on the Fed, and could have gone the other way, and it could go the other way here. The way I would trade it, I'll be flat before the announcement of the NFP, but I wouldn't mind seeing another weak number and be able to fade dollar weakness on that report because my big picture in the dollar um, is still up here. Here's your weekly. So before it's over, I think that we're going to be looking at 95 to 96 back to this major support line. Even if you're a bear, this is shaping up. If you know anything about Elliott, and I know just enough to be dangerous, you're looking at what would be an A and a higher low for a B and then a C. All right, for a corrective wave that could have a quality here, or what you get sometimes on a C wave or a 3 is a fib extension of this move. So some type of equality would take us up towards 95. If you're bullish, you're looking at if you're long-term bull, this is what the long-term bulls are looking at. And I still think it's to be determined at the battleground up around 96. We close over 96, but they're looking at this as like a big flat correction, right? And a lot of people, myself included, before the Fed thought we'd take out this low and maybe challenge 88.60, but this is still either massive distribution and we're going to have a crash, or if you're a bull, what you could possibly have is just a big continuation move. And if you're, say, neutral, which is really what we should be in the dollar, look at this since 2016, we've been in a range from the low 90s to 103, right? And it's a rectangle. And it's one of two things. It's either a continuation formation where we break out over 103 or we break down. Right now, I'm thinking we rally maybe back to here and then we have a dollar break because I really think to keep the economy going for another few years that the sacrificial lamb would have to be the dollar. Now, if the Fed fails to be able to manufacture that and they have a misstep and they tighten too early and, there's they're not perfect. there were days when Greenspan stayed tight too long and knocked the president out of office. You could even go all the way back to the 30s, and we were coming out of the Depression, and the Fed started to tighten, and that extended the Depression until World War II. So they're not omnipotent. Now everyone thinks they are, and people, the Fed put has been very successful being an equity bull. And you know, when they don't pay you anything on your money, what they've done since '08 is force people out on the risk curve and made money so cheap that it sure doesn't make sense to hold on to it. You better spend it before whatever you want to buy costs more, or anything you want to invest in moves higher without you. So that's hey Daniel, G Dory, how are you? So anyway, this is just, you know, a little bit of big picture stuff that I'm talking about. You know, do the right thing today and tomorrow will take care of itself. I really believe in that. So, and also, if you're going to be a swing trader and you're trading with, you know, 30 pip stops, 25 pip stops, I have to ask you this. How can you be right for a swing trade if you can't be wrong for a day? If you can't be wrong for a day, how can you be right for a week? So, you know, I think people use too much leverage. Their stops are too tight. They end up being right the market, wrong the trade, with their stops being picked off. You're better off with more tolerance on the trade and let your trades breathe than trying to be perfect. And I know every once in a while, like yesterday in the crude, I hit it on the button. There was no, um, you know, there was no drawdown, you know, from when I started talking about it at the 74 level right here, no heat, right? It didn't go up and make a new high, you know, that's where the stops were, you know. You could have taken profits all the way down here, but you know what? Normally I take heat, right? You know, I might be short in here, and but I would have waited for the third drive. Anyway, usually I don't hit things on the button. Some people think they can do it. I have done it, but I'm not going to be delusional and think I'm going to do it all the time. Normally, I have to go through a period of drawdown, and that's why I piece in to the market. If you notice, I'll say at times put on a third, put on a half, and on liquidation, same way. Don't come out with everything. Try and be there in case it turns into a runner, but also ring the register with partial profits. Okay, so you know that's money management. It's not about forecasting or trading correctly. It's about money management. And something else to keep in mind, if you have windfall profits, um, hubris, and then you get overconfident, and then you start labeling your profits as the house money. No, it's your money. Protect it like it's your principal, because now it is. So let's get back to the markets. Euro's lower, you know, still negative this market, but you know, I have to look for all kinds of possibilities here, right? We may not go straight to a new low here, especially if we get a disappointment. Just like I was showing, the dollar could have been in A, and then it's already progressed, and then you get a C. The dollar could weaken into the Fed and not go, maybe have something like this from here, head up towards the 120 level or so, maybe 20 and a half. So if we get a rally in here, I'm still going to favor long dollar positions. So I would short the euro, but I wouldn't short the euro because yesterday I think I may have called a pretty important turn. Actually, the turn was last week in euro pound as it held the 78.6 level right here. See? And I was showing this last week and said, well, we could get a reversal week, which is what we had. So I posted it here. We closed here Friday. It said buy a break to 85.75. It got down to 68. So that was a pretty good entry. And up here you have 30, 40 pips that you put in the bank, and now you have a BE stop. So both the crude trade and the euro pound trade were the only um, things that I posted yesterday for, so the week's off to a pretty good start. And I would stay with this and leave your stop in there because I do think that there is potential. That's a monthly. Let me look at the weekly. I'll show you the 2 week off number. So people that are new, I use what's called a 2 week off number, which is a reversal. So last week we did have a reversal closing over this candle. You don't know till Friday what type of weekly candle you're going to get, but this week's um, off number is 85.92, and we're at 95 right now. Looks like there's a low resistance here, but I see no reason why, if we get a continuation here, why we can't get back to this confluence. Or 88 was a big area, and we have a confluence of moving averages here on the weekly. So if I want to be, so if I'm bullish EG, here's a little teaching now, and I'm waiting for your answers. If I'm bullish euro pound, looking for higher prices in euro pound, what is my preferred long when I think the dollar is going lower between the euro and the pound? What's the preferred long? G. Dory, Daniel, Mike, Tim, you guys, what's your preferred long if you're constructive on euro pound? That's correct, the euro. Okay, because the euro's outperforming it, so that means it has relative strength over cable. And when you're bullish a dollar, your preferred short is the pound. So until this trade either aborts by taking out last week's low, or gets up to a bear market target up here, that's the way I'll trade it. When I'm bullish a dollar, I'm going to be shorting cable. And when I'm bearish a dollar, I'm going to be buying the euro. Okay. And if I don't want to do either, I just sit long euro pound and let that differential work for me up to target areas. Do you think there's a few buy stops here? I know there are sell stops under last week's low now. I put mine there yesterday with a little tolerance. And of course, I don't think there are a lot of people bullish this pair. First of all, it's bored people to death, right? All this sideways action had a nice start, looked like it was going to be a moonshot. And then all we did was enter a work off this overbought condition by moving sideways. So who's even paying attention to it? So if we start closing over 86.20, it's going to look pretty good. There's some space there. So here are where the sell stops are, here and here. But there's probably tons of buy stops all the way up over this high, and the grand prize being these highs before it turned back down. This is where you'll have the last of the bears capitulating in EG. Everyone see that? Okay. Also, last week, a pretty good buy in USD CAD. Again, with my bullish dollar bias, we were buying this market at 22.80. So, if you're still in a piece, you're up 90 pips. I'm still looking for new highs before we have a bear market. In fact, I think I've shown my long-term targets in Canada are up around the 130 handle to 132 in this range. So we have an inside week working here. Again, everything is, and I'd recommend that if you haven't taken anything, take something off now, because you only have a couple of days left of trading before the NFP on Friday morning. Try and be flat. That's my advice. You want to bet red or black, go to your nearest casino. There's lots of roulette wheels. Don't do it with your trading account. So nice trade there. That the bias of long dollar had that working. Aussie, still under plenty of pressure. Someone asked me Friday here in the main chat here at TradeGate Hub if Friday the dollar was, selling off, right? Aussie was up here. And they asked me, Dale, you still bullish a dollar? And I said, yes, looking to recommit to dollar longs and Aussie shorts, Euro shorts, pound shorts, Monday, Tuesday. I said, but you could put a piece on in Aussie, and that was up here around the 76 level. So you have 100 pips. Aussie could do the same thing. Yeah, it could continue to wash out, but you could also have some type of ABC that could take it back up here. So just something to be aware of. You milk the move pretty good. Don't expect perfection at the crap table. You're never going to sell the high and cover it at the low. We're shooting to take 50%, and if we're doing real well, we're taking 70% of a range of a move out of a move. Um, you know, you're going to end up giving yourself an ulcer if you think you're going to catch everything from top tick to low tick, right? So you want longevity in this business. Um, don't expect you to be perfect. Don't expect the markets always behave perfectly, and be happy with what you have been given by the market. How many people make 150 pips on a trade and then they'll look back and if they would have stayed with the trade another few hours, it could have been 200, and they'll lament over that instead of putting their energy into next. The most important word for a trader is next. If it's not in your head, you need to write it down. And it's not just in trading, it's in almost everything. Professional athletes, when they make a mistake, a great quarterback throws a pick. Does he come into the huddle the next time they have the ball and lament about, what a bad play that was? No. It's next play, next man, next trade, right? All right. So that's pretty much coverage in the currencies. The yen, I almost think there's one more high um, because of yields, but yields they could go either way. I find myself flip flopping with this action here. So we'll see. I mean, it does have the look of a possible bull flag. There was divergence up here, but you know what? This could happen too. Let me do it here. This could happen. Well, it's kind of like this, to take us down to under 130. Anyway, let's see what it looks like on a shorter term time frame. So, yeah, that's 128 for a 3. So there are a lot of coin tosses with this yield chart. And, I think it's all going to depend on how things come in. Maybe another weak number and, we're down here. So we'll see. As I said, there was no reason. I didn't see anything to do in gold. While we were moving sideways, I didn't catch this break, but I've been long dollar and long Canada and short crude. You could have the same trade on in a different instrument, and it's basically the same trade. This is paying pretty good. Silver under some pressure. It looks like the gold. Yeah, the gold made a new low. For those of you that are waiting for a gold bottom, maybe this is what it takes. I'm not going to buy it here. But this is not confirming on this 4-hour chart. See this new low and a non-confirmation? You have a non-confirmation on the 2-hour. 15-minute looks a little funky here. Yeah. This I don't buy big breaks like this and then flagging action. So, we talked about gold turning bad under 1845, and someone asked me, what would you do in gold? And I said, buy between 1740 and 30, so we're not there yet, or sell up at 1820. So looks like we're headed towards the buy point first. So we'll see. And that's only going to be counter trend because it is my view that before gold bottoms, even if we have a nice bear market rally, that we're going to see 1600, maybe 1550. So I'm pretty bearish. I know a lot of people are thinking 1740 is going to hold and then we're going to new highs. Um, it's hard for me to want to get long anything when the dollar is in a bull phase. Within the confines of a bear market, it's just a reaction for now. But when the dollar is good, almost everything else isn't. I mean, stocks still are. I think we're making new highs in the S&Ps here today. Yeah, there's your new high. We're still diverging. So far, I've underestimated the Nasdaq, which is, still in a throwover by quite a bit. And, you are getting really high readings. I don't see much divergence here. We might have some on the 2 hour for the first time, but the S&P much weaker. Uh, Lower yields constructive for Nasdaq, so I'm early. And that bearish position I put in SQQ vertical bull spread in December. You notice I bought a lot of time because it takes time, and I didn't expect to hit it on the button, but I started when we were at about 14,350. So I'd be stopped out of a futures position by now. But I'm only down, I don't know, paid 72 for them. They're being offered at 65. So, I don't consider that real damaging. I still think that we're uh, putting in the top. But remember, I talked about uh, wait till the end of the month. And you could go back and listen to the videos. I said, we could rally into month's end. And that looks like what's happening here. So you got a couple of positive things in Nasdaq, and I felt like I got run over, and I was glad I'm just in a vertical bull spread in December. But talked about a 4314 number in the S&Ps. We're not that far away. Look how we're diverging in S&Ps. And if you look at the Dow, it looks even weaker. And you know what hasn't made a new high for a long time? And if you're a speculator, might be the best short out there. Maybe it's trying now, but it's a Russell 2000. Look at that. It did not make a new high Friday. It tried. See this? This and the Dow are the two weakest indexes. I happen to be, bearish the strength on the board. So, good trade selection, Dale. See, I'm human. I make mistakes. So anyway, um, take a look at this Russell. We haven't made a new high in the Russell. Look in how long. And we tried during the rebalancing here. The high was 233.40, and this high stood at 234 and a half. So we still have not made a new high in the Russell going back to March. Okay, so you're talking about 4 or 5 months with most averages making successive higher highs, right? So, I mean, the Russell is giving you some kind of message, and these are mainly domestic stocks. A lot of them are, regional banks. And anyway, the Russell and the Dow are the two weak sisters in this. I don't know if the magnitude is going to be bigger, but to me, this looks like a nice spec for a short. I mean, people are saying it broke out, but look how long it's been hanging up here on a breakout. So when markets break out and they're still giving you a chance to buy the breakout a month later, be skeptical. Okay. So, people are saying, well, it's still above this triangle, it's still a breakout. Well, this was a breakout week with no follow through. Then it negated the breakout. Then we had another week where it broke out again. And here we are, and the market's saying, you know what, Dale, you're a nice guy. So I know you weren't paying attention that day on the breakout in IWM. So I've given you a month to think about it, and you could get in pretty close to the same levels uh, as if you were there for the breakout day. So call me jaded and skeptical when Mr. Market gives me so much time to execute, like a month. I do believe in retests, but the more retests you have, the less credibility it has to me, because there's too many opportunities. Sometimes I think they're just, you know, they're trying to bring some more longs in so that they could that'll be fuel for when they take it down and liquidation occurs. Anyway, pay attention to the Russell. I think the Russell could pull back to um, the pre-COVID crash highs. And I do think that the Nasdaq, although it's leading, could pull back here. So to be conservative, you need closes back under now around 4,260. So 4,300 lower. But I think I certainly wouldn't be long up here. So we'll see. We only have one more day left in the month. Let's see what happens the rest of the week and the first week in July. We'll see if we could get that infrastructure build done. I wanted to show Ethereum's acting a lot better than Bitcoin. I mean, Bitcoin's up, but if you notice, Ethereum held this low while yesterday Bitcoin took it out and flushed some people. So Ethereum looking good. It's almost looking like cryptos are ready for another move to the upside. And isn't it interesting? I brought it up before that how crypto and gold, my friend Jim Welsh wrote about it, that they move inversely to each other. If anyone can explain to me why, let me know. It's just something I noticed, but I'm not sure the mechanics why that would happen. But you have an inverse correlation between gold and crypto. So, any questions before I say goodbye to everyone? VIX, still getting these ghost pips. I still think the VIX is under accumulation here. Any questions? Okay. All right. Well, I have Adam Button from Forex Live with us tomorrow. Same time. Add FX Button at Forex Live on Twitter. And Adam's going to be with us to talk about what he's seen seasonally for the month of July. Remember, everyone, don't just count your pips, count your blessings, and you never go broke taking profits. Bernard Baruch. And that's why I stress taking partial profits. Have a great trading day. Adios.